Hey guys, JC Peretz here, founder of AllStarCharts.com, and today we got a little lunch and learn. So this is something that we're starting to do more of, where we, several of us that are focused on a particular topic, want to come and talk about it and kind of share with our audience sort of how we look at things. One in particular that's been sort of in conversation lately is Japanese candlesticks. And we'll put a link in the show notes to us in Tokyo, myself and Sean out in Tokyo looking for Japanese candlesticks. We went to the Tokyo Stock Exchange, not a single candlestick. We couldn't believe it. Watch the video on YouTube. Just click the link. We'll put it in the show notes. But nevertheless, I think this is a valuable tool that I think is misunderstood. In some cases, I think people overthink these particular types of candlesticks. Most people don't really even know what they're looking at. To be honest with you, from what I've seen, they'll go onto their software and there's like whatever default setting, and those are the candlesticks that they look at, and they're not sure what the colors mean or what everything is. So I figured we kind of take the time today to kind of just go in detail. And even if you know Japanese candlesticks, even if you've read all the Steve Nissen books and everything like that, and you consider yourself, I think maybe you even might pick up a fun fact. And those of you who have not read any of the Nissen books and really don't understand specifically what's going on in these candlesticks, I think you'll get a lot of value from this. We get good feedback from this sort of thing because there's just a lot of misconceptions. So let's just talk about what it is. This is sort of informal, so kind of let's just go over it. These are what candlesticks look like. Generally, there's green ones, red ones, filled ones, hollow ones. All kinds of things going on. These are candlesticks in action doing the dance. Here we're looking at, this is a monthly candlestick chart in industrials going back 15 years. So each candlestick represents 1 month of trading in this particular case, as opposed to something like, here's Bitcoin. Each one of these represents 1 week of trading, each one of these candlesticks. And then here is a 4-hour candlestick chart of Bitcoin, where every candlestick represents a 4-hour period. So there are 6 of those candlesticks each day, right? So you could break them down into any sort of time horizon. You could do the same thing with bars, for the record. Here we're looking at a bar chart. It could be a daily bar chart, which represents 1 day's price action. It could be a week, could be a month, right? You could break it down the same way as candles. But look at the difference between a bar and a candlestick, right? So here what we're looking at in the case of the bar, we're looking at a high, a low for the day, right? This is prices. So it's the high price, the low price, and then you're going to have these little dashes to the left and to the right. The one on the left is going to be the opening price, and the one on the right is going to be the closing price. And this is a bar, right? So when you're looking at a bar chart, here's a daily bar chart of the S&P 500. Each one of these bars is 1 day. This is what those particular bars represent. Then, of course, you've got the candlesticks, and it tells a much different story. You study old, Japanese wisdom and books, and there's a lot of stories, and these candlesticks, I think, really do a good job of telling us in a very quick, easy to understand way what happened that day, or what happened that week, or what happened that month, or what happened in that 4-hour window, or what happened in the 1-minute window, right? There's day traders that are looking at 1-minute candlesticks. God bless them. I'm not one of those, but knock yourself out if you are, right? The market is fractal, meaning that the behaviors in each of these time horizons is going to be the same. You're still going to see the same patterns over and over and over again because it's just human behavior. So nevertheless, in a candlestick, you've got your high and low, just like you do in the bars, right? Just like you do in the bars, you got your high and low, and then you got your open and the close in the bars. And sure enough, you got your open and your close, of course, in the candlesticks as well. The difference here is you've got the real body, what it's called. And that's the difference between the close and the open, right? So the wicks, the shadows, the wicks of the candle, if you will, the Japanese call it a shadow. They're the sticks that stick out beyond the real body. So in other words, in this particular day, what happened, because the candlestick is hollow as opposed to filled, in the case of a hollow candlestick, the close was above the open. Where it closed on that period, if it was a daily candle, where it closed on the day, or closed on the week if it's a weekly candle, is above where it opened. So when you see hollow candlesticks, that's what that means. In a filled candlestick, however, the close is below the open, right? So you still have your high low. It's like here in the hollow candlestick, you have your high low, but your real body is filled, right? It's a darker rear body. It's filled. So think of it as a candle melting. It opened up near the top and the candlestick melted down towards the close, right? That's what that means. As opposed to a hollow, which it opened, it was down near the low, sold off a little bit, rallied, and closed up near the highs. That's what happened on that period. As opposed to here, it opened near the highs, rallied a little bit, failed, and then just sold off all day and closed near the lows. Or sold off for the week and closed near the lows. That's what that means. You've got your filled candlesticks, your hollow, right? So in this case here, so you got this one melted throughout the period. So that's what we call them periods. So it can mean in daily, weekly, monthly. So in this particular period, rallied throughout, closed near the highs. In this case, opened around here, rallied, had a nice rally going, and then sold off, fell below the opening print, and continued lower, closing towards the lows. Now, I want to talk about the different colors because the colors here, we're looking at a green and red colors. What do the colors mean? So first we talk about the filled and hollow. The filled and hollow is just where the close is relative to the open. It has nothing to do with the prior period. It has nothing to do with the previous day or the previous week, right? It's just that period alone, whether it closes above or below the period. That's whether it's hollow or filled. In the case of the colors are based on where it closed relative to the previous close. So if it's green, it closed above the previous close. And if it's red, it closed below the previous close. So we're looking at daily candlesticks. If it's a red candlestick, it closed below yesterday's close, right? Or last week's close in the case of a weekly candlestick. If it closes green, that means it closed above the prior period's close. Regardless of whether it's hollow or filled, it's only based on the prior close. So you can have hollow green candles, you can have filled green candles. You can have hollow red candles, you can have filled red candles. And let's talk about that because here we're looking at a red hollow candle. So in this case, you're looking at a downtrend, right? You got several down days in red. In this case, you had a gap down towards the lows and it rallied throughout the day. That entire period rallied, closing near the highs of the period. However, still below the prior period's close. So while hollow, because it closed above the open, still red because it closed below the prior period's close. Just like you can have a filled green candle, right? So green, meaning it closed above the prior period's close, however, filled because it sold off throughout the period, closing near the lows after opening near the highs of the period. So let's go over that. So you've got a hollow green candle. That means it closed above the prior period's close, meaning it's green, and it's hollow, meaning it closed above the open, right? Now you got a green filled candle, right? Meaning it closed below the open, that's why it's filled, but it's green because it's still closed above the prior period's close. Then you've got a hollow red candle, right? Hollow meaning it closed above the open, red meaning it closed below the prior period's close, and of course, the infamous red filled candle, which you see a lot of in bear markets where it closed near the period's lows of the day, right? Below the open, well below the open in a lot of cases, and red also below the prior period's close. See, a lot of these, a lot of filled red ones in downtrends, a lot of hollow green ones in uptrends, right? These other ones tend to come perhaps near reversals when you see these filled green ones, when you see these hollow red ones, those tend to come near turning points. Green, hollow, red, filled, you tend to see in trending markets. And then, of course, you've got the Doji, my favorite candlestick of them all, and different kinds of Dojis and everything like that. These are evidence of indecision, where you don't necessarily have too much of a real body. You just got to have this little stick here, which means that the open and the close were right around the same level, right? Maybe not to the exact penny, but pretty damn close. And you tend to see these Sometimes you'll have a little bit of a real body, and they call them spinning tops. They got all kinds of silly names for these. If you're interested, Steve Nissen is your guy. You can go read the Steve Nissen books, Nison, and you could get all the details on all the names of the candlesticks. But I would encourage you to not worry too much about the names themselves of the candlesticks, and more about the implications and the story that they're telling about that particular period. So of course, so in this case, just these examples. So you rallied throughout the day, sold off during the day, not necessarily in that order, closed pretty much where it opened, right? You tend to see these at turning points as well. Go back and study prior peaks and troughs in markets. You're going to find dojis up there near those peaks. And here's, of course, your dragonfly doji, where both the open and the close are near the top, although you had a massive sell-off in the period, close back up near the highs. That's your dragonfly doji. And of course, your gravestone doji, right? Where it opens up, rallies throughout the period, sells off, closes all the way back down where it originally opened up. It's your gravestone doji. So, this goes back a long time, guys. This goes back to the 18th century Japanese rice futures traders. A lot of the workers, they paid their taxes in rice. So they would store them in warehouses, and they would give them these warehouse receipts so that they can actually transact using these warehouse receipts. And eventually they started selling future warehousing receipts that didn't exist yet, futures. So these were rice futures traders. And then this guy, Monehisa Homa, he kind of figured it out. This was by Osaka, I think in Sukata, which is 6 kilometers from Osaka or something like that, I'm pretty sure. So Monehisa Homa, he started studying the prices of those rice contracts going back to the 1600s, and really understood that it became a situation of humans, going back and forth, and the fear and the greed really driving these prices. So Monehisa Homa became such a great trader. He was actually honored. He was given status as an honorary samurai. Monehisa Homa. Shout out to the homie Monehisa. And just taking a look at just some different candlesticks just in general in real time. Here we're looking at Dow Jones Industrial Average, Dow Jones Transportation Average in candlesticks, as opposed to a line chart, right? We talked about bars. These are line charts. So line charts, what they do is that they connect all of the closing prices. So if it is a daily chart, they're connecting every close for every day into a line. If it's a weekly line chart, it's connecting every week. We also like to use line charts for ratio analysis when comparing two asset classes. Having two different, the candlestick's not telling us anything. It's two different things. So just to clean things out and smooth that out, we like to use lines for things like that. Also things like total return. Here we're looking at all of the S&P sectors equally weighted. Whether equally weighted or cap weighted doesn't matter. We'd still be using a line chart to really show, performance and the correlation stuff that we're doing. So here we're looking at inflation protected treasuries relative to nominal yielding treasuries. So this ratio is in blue. And then in black, you've got crude oil futures. So you got two line charts. So it's not like, oh, JC, do you use candlesticks or do you use bars? Like, I think there's a time and a place for everything. I think all of these different tools for a chart, I think, are very useful. But understanding what they are and what they represent, I think really goes a long way, because it's not just the candlesticks themselves, but where it's happening, like where we're getting these candlesticks. That's important. Like you could see these like in Bitcoin and Ethereum, right? These big green candles really started showing up right where support needed to come in at those former resistance levels, right? And this is another good example. These long tails, the wicks, right? Those long shadows, you tend to see those at reversal points as well. These failure to the kind of the bulls are in control, then they fail and give control back to the bears like that. You see that a lot in different turning points. So, see it in real time. Also, let your candlesticks complete. If the candlestick is not complete, you're overthinking it. I know a lot of people that are looking at candlesticks throughout the day, and they're looking at a daily candlestick at 10 o'clock in the morning. It's not complete yet. So let the candlestick complete before you judge it. You're going to drive yourself really crazy, being like, wow, if this holds here, this candlestick's going to be crazy. The market doesn't, you're looking at a weekly chart. It's Tuesday, bro. What are you doing? Right? So people are looking at monthly candlesticks before the month's over. It's like, did you see that monthly candlestick on financials? It's like it's the 14th. Like, we're not even halfway done with the month. Really? You know, looking at daily candlesticks at 10:30 in the morning. Like, market don't close till 4. What are you doing? Right? So don't prejudge candlesticks. I think that's a mistake a lot of people make early on. Let the candlestick finish. Right? Can it live? Can it just do it? Let it dance. Let it do its dance. And then if you're like me and you're looking at, let's say I'm looking at a weekly chart here in Bitcoin, and this candle's not complete, I'll highlight it. I'll, like, you know, shadow it in yellow. You know, I'll highlight it, or I'll delete it altogether. You know, one or the other, to highlight that this candlestick is incomplete, but I want to use a weekly chart to reiterate why this level is so important, right? Because sometimes, like, you want to look at a longer term chart to reiterate a specific level, but that candlestick's incomplete. So, you know, I like to just highlight it that it's not done yet, or, you know, delete it altogether is really what I like to do. So listen, guys, this is just a few things on candlesticks that I hope was helpful. If you have any questions at all on candlesticks, you can, we'll put everything in the show notes. You can email me directly, info@allstarcharts.com. That's info@allstarcharts.com. Email me directly with any questions you have on candlesticks. I hope this was helpful. I hope maybe you learned maybe a little tidbit of candlesticks that maybe you can now add to your arsenal. And if you did, let me know. Shoot me an email, info@allstarcharts.com. Thanks, guys.